Hello and live from London, this is Business Today. I'm Nakwesa Burak. Big tech just keeps getting bigger. Two of the giants of the industry, that is Amazon and Apple, have reported bumper earnings as the AI boom shows no sign of slowing down. Amazon's cloud business reported its strongest quarterly growth in nearly 3 years amid growing demand for computing power linked to AI. Amazon Web Services, that's the e-commerce giant's cloud computing division, reported a 20% surge in sales to $33 billion. Well, that sent shares in Amazon soaring by around 13% in after-hours trading. Let's take a look at Apple. Well, they reported revenue for the fourth quarter at over $100 billion, and that figure amounts to an 8% increase from the previous year. Apple's boss, Tim Cook, said the latest iPhone models have seen a tremendous response, were his words, across the globe, and expects the upcoming Christmas and New Year's period to be a blockbuster. From New York, here's Erin Delmore.
It's a big week for tech earnings, and let's start with Amazon's big day. The company's earnings beat analyst estimates. Now, one of the firm's major strengths is its cloud growth. Its cloud computing platform, called Amazon Web Services, or AWS, saw its revenue accelerate more than 20% to $33 billion. The firm's CEO said that was a pace unseen since 2022. You might remember that AWS was in the spotlight this month after an outage disrupted businesses worldwide. It kept consumers from accessing major websites and apps, everything from sending digital payments to posting on social media to changing plane tickets. The cloud business is also facing fierce competition from tech rivals like Google and Microsoft. Amazon also announced cuts to some 14,000 corporate jobs just this week. But overall, third quarter earnings made for a strong showing for Amazon, which has fared the least well this year compared to the other major 7 tech stocks. Meanwhile, Apple reported its own quarterly results and beat expectations. iPhone revenues, though, missed expectations, but sales were still up 6% compared to a year prior. The firm's been under pressure from President Trump's tariffs on China that strained manufacturing and production. This is the end of Apple's fiscal year, and a real star in its earnings was its services division. That includes Apple Music and Apple TV, and it's been acting as a real growth engine for the company, despite legal and regulatory hurdles. The firm also teased some AI partnerships to come.
And that was Erin Delmore. Let's discuss this further with the independent financial markets commentator, Susanna Streeter. Susanna, looking at those Apple figures first off, I mean, they've compared sales of the latest 17 to the Model 16 last year and doing remarkably well.
Yeah, interesting, really, these results, because Apple has been a bit of a laggard in the Magnificent Seven pack of tech giants this year. But this tortoise is catching up because of this demand that was described by Tim Cook, the CEO, as off the chart. So they also show that Apple really does still have big brand pulling power. And now the real race is on to fulfill customer orders for its latest handsets, including the ultra-thin Air and the new editions of the iPhone 17. So what really did infuse investors was that forecasts for the crucial holiday season beat expectations, with a growth estimated at between 10 and 12%. Now, there are still some hiccups of problems in terms of supply constraints to deal with and actually meeting all of this demand. But certainly, if you look at where the share price went in after-hours trading, it certainly shows, though, Apple really is doing what it hasn't done so far this year.
And turning our attention to Amazon, some of these earnings have been reported as unexpected. Tell us more about that.
Yes, I think what you're seeing really with Amazon is that it's pulling off what its big tech rivals are still only aiming for, so achieving return on investment from its huge AI spend. Because there's been a lot of questions raised about whether this eye-watering capital expenditure that we're seeing is really justified. And that's been unsettling investors. You look at what happened to Meta's share price earlier in the week. But AWS, so the Amazon's mega cloud computing business, is already reaping big rewards from all of that money it's put into because of this huge demand for computational power and the kind of infrastructure backbone that the AI revolution needs, because AWS sales surged by 20%, and that was unexpected. So it's aiming and achieving to do what its rivals are so far they're not quite there yet.
Okay, Susanna Streeter, thank you very much for that.